tokenizing everything. And that seems a big deal. It's like NASDAQ, and I mean, everybody's looking at this now and figuring it out. Robin Hood's, moving at lightning speed on this. How do you think about that trend?
Yeah. So you and I agree that blockchain is going to change the world, but it's not going to change it overnight. And your statement of tokenizing everything, I would say maybe not quickly, And so there's a great, I'm on the board of Figure, and Mike Cagney's super brilliant guy. And
I love Mike. He's a great guy.
Well. He said, and he's the biggest tokenized real world asset entity out there. It takes homogeneity and ubiquity to want to be on the blockchain. And that is a great way to say it. Treasuries are the ultimate homogeneous product. Like, you do not care if you have the 3 3/4 of 2036 versus the 4 7/8 of whatever. You couldn't care less. And they're ubiquitous. Everybody on earth needs access to US dollars and probably would like interest. So US treasuries are great. And we're investing in a protocol called Ondo that does that. They already have, I think, 12 billion of that. Great use case, right? But we've invested in things where we were a bit early, where we were trying to do like commercial real estate on the blockchain. Apparently they're illiquid for other reasons than they're not on a blockchain. That there's a reason commercial real estate's not on the blockchain yet. So what I would say is, although in the fullness of time, everything will be on the blockchain, treasuries, US dollars, like stablecoins definitely want to be on the blockchain. And as long as the US SEC wants stocks to be on the blockchain, it'd be great to have them on the blockchain.
Yeah, because I think if you think about, again, the US's strategic policy, having stocks on chain means that everybody in the world can invest in Tesla and Apple and whatever, right? Yeah. It's instant access to everybody. It's impossible, near impossible, if you're in India or the Philippines or whatever, to buy the world's greatest companies. You can't do it. But this suddenly will have access to everybody. So it just opens up the US capital markets to everybody, and the sucking in of capital is going to be huge. And that's how you service the debt.
Yeah, and I was spot on that. We've had really kind of primordial versions of that. We've had American depository receipts, global depository receipts, and they kind of work, and like wealthy people in a couple countries can access those. But you're right, a 20-year-old in India probably doesn't have access to a GDR, right? And they can't buy Apple. And so, yeah, it seems self-evident that it'd be great to help raise capital to US-based companies. And so tokenized equity seems like a very good way to let US companies raise capital. And again, the other half of this that people don't talk enough about, financial inclusion, right? Why can't that 20-year-old guy in India get to buy Apple stock? Apple stock's been going up for 25 years, right? It'd be great if that person could actually participate in the capital formation that's making other people wealthy, right? So I just don't see why either side shouldn't want this to happen. We want to raise more capital for companies, and then we want to let more people invest.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.